The stock market is up today despite recent lows during the coronavirus pandemic. The recent gains come because of optimism of a treatment and as President Trump reveals plans for reopening the economy. For more on this, I'm joined by Yahoo Finance anchor and reporter Akiko Fujita. So, Akiko, I want to get your take. What do you make of the big jump today in the markets? Is this optimism going to be something we'll see as an upward trend?
Yeah, there's an argument to be made that much of the negativity in the economic data we've gotten, a lot of that has already been priced into the market. So what we've seen is the market move on any sign of optimism. You talked about the vaccine today. Gilead Science is moving in a big way. That stock up about 8%, largely based on a report from a medical publication saying essentially that patients who are taking part in the clinical trial for this antiviral medicine from Gilead have shown signs of improvement at a much more rapid rate than initially thought. So we're talking about fevers, respiratory symptoms. A lot of that has moved along much more quicker. And so investors looking at that as a sign of optimism, potentially a vaccine around the corner. Of course, Gilead Sciences has come out and said that, look, this is just a very small sample. I should point out one other piece of good news investors seem to be hanging on to today is that announcement from Boeing that they will start restart production for their commercial planes over in the Puget Sound region around Seattle. That, of course, will be done in a phased way. But these are all tiny signs of hope that the economy is going to restart again with the potential of a vaccine down the road. And that seems to be what's pushing the investor optimism today.
Everybody holding on to any glimmer of hope they can find at this point. China released GDP numbers. We got the first sort of indication of how the economy there is doing. They've resumed business. What can we learn from them? How big of a hit is it? And is there any indication of any examples we can draw from their economy that could be parallels to the U.S.?
Yeah, that GDP number coming from China certainly always closely watched, but especially so this time because they were, of course, the first country to have to deal with this pandemic. And we're starting to see evidence of that economic hit, a 6.8% contraction compared to the same period a year ago, 9.8% decline from the previous quarter. So this is a significant hit. And you see on the screen there in terms of the context, the worst economic drop since 1970s. We haven't seen a contraction in China since then. What does this all mean in terms of how we see the parallels between China and the U.S. economy? Well, you could certainly argue that this is a sign of things to come. In terms of the economic downturn, China, just like the U.S., went through a significant closure, although you could argue over in China, it was much more draconian than what we're seeing here in the U.S. We've seen manufacturing go down, industrial output go down, retail sales go down. These are all things that we expect here in the U.S. Having said that, we should point out a lot of economists will say China was in a much weaker footing going into this crisis. Remember, last year they saw the slowest growth since the 1990s. The U.S., on the other hand, the economy was on a pretty secure footing with record unemployment, high consumer sentiment. So I wouldn't put them side by side. But I think a lot of people are going to be looking at the China numbers to say, well, maybe there are some things that we can pull from here in terms of the downturn we're expecting.
Also this week, it was fascinating. JP Morgan Chase and Wells Fargo released earnings down almost 70%. How much worse do you think this can get? What are you watching for? And what really stood out to you from what Jamie Dimon said earlier in the week?
Yeah, so we saw the big banks report, and the clear message seemed to be that things are bad right now, but it's about to get a lot worse. When you look at JP Morgan's economic outlook, they have projected a 20% unemployment, a 25% contraction in the second quarter. And that seems to be driving some of the moves that they have done. Now, in terms of what I've been looking for, the loan loss provision is one thing that stood out to me, largely because that is money the banks set aside in anticipation of any kind of default on the loans or inability for their clients to be able to pay. And JP Morgan setting aside roughly $6.8 billion in the quarter in that provision. That is 6 times what they did in the previous quarter. So that gives you a sense of what they expect, how significant things are about to get. It's also important to always keep in mind with the first quarter, this is just a small part of the coronavirus sort of lockdown we've been experiencing. The second quarter is what a lot of economists have pointed to as the real pain point that we're expected to see.
Incredible. We'll be watching that second quarter as well. Akiko Fujita from Yahoo Finance. Akiko, thank you very much.